It's 2023, and it's about time you put a hat over your investments because this year's impending recession might just rain harder than most of us could speculate. The Federal Reserves are racking up interests, causing severe and rapid inflation across borders, plus nerve-wracking employment rates. Stocks are on a decline and companies are going out of business. The 2023 recession is becoming more imminent every day, and fluctuating economies today are more felt than just observed. The possibility of an economic collapse is just around the corner, and that's not even considered a conspiracy seeing where we stand today. While it's certainly frightening to weather this decade's economic downturn for months or even years, these types of events present a throng of new opportunities and horizons waiting to be spotted by investors. But before you take a new leap or jump on that next opportunity, it would be wiser to first check on what you already have and protect them while you can. Welcome to Luxo-Life, your partner toward personal growth and success. Today, we're going to count down some of the best investments to take advantage of as we prepare for a potential economic collapse, why they make sense, and why you should start securing your portfolio and financial prospects with these wise investments. Don't skip ahead, you may miss the most powerful tools you can use. Number 7. Stock funds. Whoa, wait a minute. Why should you invest in stocks when your current stocks are already crying? Well, you've heard it countless times, the time-tested investing strategy of buy low, sell high. While stocks are declining, their prices are literally on sale for you to take. Risks are still present, as it's crucial you only invest in industries that have been through ages of recessions and inflations, and companies with reliable history and remarkable resilience against economic highs and lows. However, sprouting companies that are showing promise despite these tough times are also potential good investments. Well, here's the good news. You don't always have to strain your brain thinking about which companies you're going to invest in and how much. Thanks to modern ETFs and mutual funds, you can take a bite out of multiple pies and still get hefty returns for the long term. Greater diversification and distribution of risk are your advantages when it comes to these funds. More so, they're usually less volatile than private stocks, and you earn from the shares of multiple companies just by buying a single security. An example of that security is the S&P 500 Index Fund, which is a collective of America's top 500 companies and is the absolute standard of the nation's current economic state. With the S&P 500, you get a decent amount of exposure and investment returns depending on which type of fund you buy, but just be wary of certain fees such as brokerage, fund management, commissions, and even taxes. Number 6. Non-cyclical or counter-cyclical stocks. These are also known as defensive stocks, and they're primarily invested in essential goods, services, and other necessities that humans naturally retain no matter the economic circumstance. Food, health, water, electricity, and the internet are common industries that fall under this category. Number 5. Dividend stocks. Dividends are a form of fixed income securities paid out by a company that offers them. They're usually paid out quarterly or annually, and the edge they come with is a definite passive income that is usually unaffected by economic ups and downs. They also fluctuate less than most growth stocks, but you do have to be wise in choosing a company that pays dividends. You're looking for companies that have strong cash flow, virtually no debt, and good financial prospects that would ensure you receive high-quality dividends while you're waiting for the market to recover. Number 4. Fixed index annuities. They're by far one of the safest investment modes to choose from, as the purpose of these annuities is to ensure your life savings and profits. They're essentially part of a contract you purchase with a life insurance company, and annuities promise significant growth over the long term with much fewer risks involved relative to the stock market. Since you're not directly exposed to the stock market, you have guaranteed interest rates and tax-deferred income growth. Insurance policies are beneficial for anybody, and with the addition of annuity investments, these contracts may just be one of the best financial decisions you'll ever make in life. More so, fixed index annuities are very helpful as you get closer to retirement age because they can help minimize retirement taxes, provide a generous income stream, pay for healthcare expenses, and even give money to your succeeding beneficiaries or loved ones when you pass on. Number 3. High-yield savings account. When the market is headed for a recession, it's wise to stock up on cash and other liquid investments to provide yourself with more options to reinvest and reposition your portfolio. Plus, it's wise to have cash in hand as it won't lose value quicker than your stocks would in a recession. They're very flexible and handy, which is why, according to Michelle Griffith, wealth advisor at Citi Global Wealth, in economic downturns, cash is king. With fast cash stored safely and profitably in a high-yield savings account, you can actively manage your money and make precise investment strategies that could help you better weather a recession. However, it's still better to not convert more than 50% of your assets into cash, as you might get stuck with it once the market rises back up and inflation eats it away. Keep your cash in a savings account as a form of an emergency fund, and remember to save it, not splurge it. One of the best things about cash in a savings bank is capital security with the potential for short to long-term returns. Number 2. Gold. As stocks decline, gold rises in value. Gold is undeniably expensive, but it's still one of the best hedges against economic downturns and a commodity that tends to retain its value throughout the ages. Gold is usually unaffected by economic issues since its value depends more on human development. As technology advances, gold not only retains its ancient value but also increases significantly. The best advantages of gold are that it's a remarkable store of value during low points, it's a liquid investment, and it's no one's liability. More so, collecting gold to pass on to your kids and grandkids is also a wise investment that future generations will thank you for. Number 1. Real estate. Perhaps a staple of asset investments is real estate. While real estate properties are also a form of defensive investment, as people naturally require and desire a roof over their heads, and since this form of investment is neither related to nor exposed to stock market fluctuations. There are times when real estate prices do decline during recessions, and you can certainly take advantage of this. If you get to purchase quality real estate for a cheaper price now and the market rises later, you have the potential to reap higher returns in the long run. So not only can you take advantage of the real estate industry during recessions, but you can also benefit from it handsomely in the face of inflation. In addition, mortgage rates may also be lower during recessions, so it might be a good time to find that dream home. Since mortgage payments are often contracted at a fixed price, you can technically purchase a property and lock it to a specific price for several years or decades, so that even when the market and rates rise later, you're still paying for an affordable mortgage rate. Fluctuations, stresses, imbalances, and collapses are often inconvenient for many people, but they've simply become part of the world's economic cycle. Even the richest of the rich can be affected and are concerned about the collapse of the economy. But like in all things and disasters, planning and preparation are your best options. You always have to think ahead and be ahead. Maybe the options above are not for you and you're still not sure where and how to invest your money, but having your strategy and coming up with a game plan that is effective for you is something we recommend to everybody. Gain the knowledge to realize and understand why you are investing in an asset in the first place. Is it beneficial? Will it complement your portfolio and keep it balanced? Or are you just doing it out of peer pressure and demand from society? Will the assets that you choose to invest in keep your money safe and guarded during economic collapses and periodical recessions? Try to assess things for yourself and make sure that whatever decision you come up with will benefit you. If you like this video, give us a like and subscribe to the channel for more awesome and educational videos. Don't forget to click that notification bell to never miss out on any of our uploads.